What's going on, guys? MMuniz here. Welcome back to the channel. In today's video, we're going to discuss the popular income ETF QYLD, also known as QYLD. Now, when I say popular, I don't necessarily mean in a positive way. In this video, we're going to try to answer a few questions. One of them being, is QYLD misunderstood? A lot of people seem to be selling QYLD lately. Are they in the right? QYLD's capital decay over time has been talked about a lot. Is it actually going to zero? Is it never going to return to previous highs? We're going to try to answer those questions. And then, as with all my videos, at the end, I'll give you my own personal opinions on what I'm currently doing. Because as a quick disclaimer, I do own around 500 shares of QYLD. And also, I am not a financial advisor. This video is not financial advice. It's up to you guys to do your own research and determine what's best for you and your family. The only reason I'm making this video is to point out a few things that I found, and maybe QYLD investors will be interested in the same thing. So with that said, let's get right into it. Now, some of my viewers may already be familiar with the fund, but I do want to give a brief overview just to help out the people that are new to the channel. So if you're looking at QYLD, it is the NASDAQ 100 covered call ETF. What does that mean? Well, it's an exchange traded fund that holds the equities that are within the NASDAQ 100. What it does with those, on 100% of those equities on a monthly basis, it writes at the money covered call options on those equities. The reason it does that is to collect premiums, which it then distributes out to its investors. So if you're an investor of QYLD, you're going to get a distribution on a monthly basis. Now, a couple things to note are this monthly distribution is typically going to be around 1% on a monthly basis or 12% annualized. Another thing to note is that it is not a qualified dividend, even if you've been holding the fund for a certain period of time. These distributions come from options premiums, which are going to be taxed as ordinary income. So the only way you're going to get around that is if you have it in a tax advantage account, such as a Roth IRA, or on the rare chance the distributions are considered return of capital, which has happened in the past, but recently has not occurred. So basically, if you own this fund, you are sacrificing potential upside growth of your initial investment for the potential payout on a monthly basis of pretty high distributions at that 1% rate. So $10,000 is going to pay you $100 a month. And that's it in a pretty simple way. A couple other things we need to talk about. It came out back at the end of 2013. It has an expense ratio of 0.6%, which means $60 per $10,000 invested. It has $6.4 billion in assets. And those assets, as I mentioned before, are equities from the NASDAQ 100. Anytime that premiums are collected and distributions are paid out, if there's excess cash, they're then going to reinvest into those equities again. So if you don't understand why we are potentially sacrificing upside growth, you're going to have to look at some other YouTube videos for that, because I don't want to take up too much time here. But basically, if the NASDAQ 100 is going up, then if you're holding QYLD, you are not going to follow that same trajectory. You're still going to get your payout, but your holdings are not going to increase in value typically, but we are going to talk about that. So now that I've given a brief overview of the QYLD fund, we need to go over the first question, which is QYLD misunderstood? Is now the time to sell? If you YouTube QYLD, you're probably going to come across a lot of people talking about how it's a bad investment, or they've sold all their QYLD, it doesn't fit their time horizon and all this stuff. To that, I guess my only question would be, well, why did you buy it in the first place? But neither here nor there. Is it actually a bad investment? Does the limit on capital appreciation mean that QYLD is never going to go back to its previous highs? That's a great question. Let's take a look. All right, so the first myth that we're going to debunk is that QYLD's price only goes down over time. It will not go back to previous all-time highs. Well, as an example, back in 2014, for 2 years straight, the fund went down. And then for the next 2 years, the fund went back up. And it actually surpassed the price it came out with when the fund opened up. So it went above $25 a share multiple times in 2018. So that alone right there tells us that QYLD can go back up. Another perfect example is back in March of 2020, the fund dropped extremely fast, and then it came back extremely fast as well. So it is not impossible for the fund to regain its previous highs. Is it likely? Well, let's take a look at something that is going to help you understand how the price actually works. So if you go to the Global X website and you go to their covered call ETF suite, which is in their documents section, you can actually see all of the option premiums that they receive compared to their net asset value. And then you can see the distribution that they paid out as well. And what I'm going to point out to make this as transparent as possible, as they're trying to do, is if we look down here at the bottom, it tells us that as a general guideline, the monthly distribution of QYLD is going to be capped at the lower of half of the premiums received or 1% of the net asset value. The reason for that is Well, that's why we never see distributions that are higher than 1%, unless it's a capital gains distribution at the end of the year. Now, if you go through history, there's not a single time when the options premiums were below 1%. So that would give us a 0.5% monthly return. We've never seen that. We've never seen one that low. And that's because there's always been a decent amount of volatility. Now, as March 2020 came around with COVID, and since then, we've seen higher options premiums because the market's been more volatile because of what's going on. You know, the Federal Reserve raising interest rates, inflation being through the roof. There's all sorts of things that are happening that are causing the market to go up and down at extremely high levels on a daily basis, weekly basis, monthly basis. All those things contribute to options premiums. So the last question is going to be, if you have a month like September 2022, where we have a 4% options premium, but we only received 1% as an investor, what happened to the other 3.02%? Well, they talk about it in the bottom. Anything in excess of the premiums received are going to be reinvested back into the fund. So they're going to purchase more equities from the NASDAQ 100, and then the next month, they're going to sell more covered call options. So now that we understand how QYLD's price can actually go up because it's receiving premiums that are in excess to the distributions, what happens in the different type of market cycles? Well, if we're in a bear market and the NASDAQ 100 is going down, QYLD's going to go down as well, but it's still going to collect premiums, it's going to pay its investors, and it's going to buy back more of the equities from the NASDAQ 100. Now, in a flat market, both the NASDAQ and QYLD should stay relatively flat, but there's going to be options premiums based on the volatility, and assuming that they are in excess of the distributions, once again, QYLD is going to benefit from that. If, however, there is a drastic increase in price and the NASDAQ goes up significantly, this is where it's going to hurt QYLD. And that's because QYLD options are not settled in a normal way that we are familiar with. They are European style options, which are settled in cash. And if the price of the underlying index goes up by 5 or 10% within 1 month, which is the timeline for the index to hit the strike price or go above it, then that can actually become a liability because they're going to have to pay out more cash than what they collected in terms of their premiums. And if that happens, they're going to have to sell off some of the assets that they hold, therefore lowering the net asset value. So in an upward market, QYLD is going to suffer. You're probably still going to get your distributions because they're not going to want to cut that from their investors, but the fund is going to suffer. So in a downward market, the fund is going to lose price. In an upward market, the fund is going to lose price as well. However, if we are staying close to flat or just a little bit up, we should see upward appreciation of the fund. So for the people that sold QYLD, what were those people doing? Well, they were timing the market. They may say that their strategy has changed, which is fine. That, great. The only thing is personally, this is just my opinion, I feel like when you try to time the market, you just end up losing. I've tried to time the market multiple times. I've tried my hand at options and I just always lose. So maybe I'm the worst investor ever, who knows? But I feel like buying and holding long-term, diversified index funds in tax advantage accounts is the ticket to success. Now, I don't have any issue with holding other individual companies or ETFs like QYLD as long as they are a small portion of your portfolio and you remain diversified. That way you can benefit from the market conditions that benefit something like QYLD, or you can benefit from conditions that benefit something like holding Tesla stock, rate cuts or something along those lines. So at the end of the day, if you're diversifying and doing what you think is best, then that is the best option. But we still have 2 questions per se to answer. Is QYLD going to zero? Well, the way that QYLD will go to zero is if the underlying index goes to zero. So if all of the equities and companies that are held within the NASDAQ 100 go to zero, for instance, Apple, Microsoft, then we got a huge problem. And yes, QYLD will go to zero if that occurs. The only other way it would happen is if we had some crazy bull market where we're seeing returns of 10, 20% on a monthly basis coming from the NASDAQ, over prolonged periods of time where where the options premiums are actually consistent liabilities to QYLD in the long term, then the fund would continue to decrease and that would cause severe problems. But I think both of those cases are going to be extremely rare and unlikely. At the end of the day, is QYLD a good investment or a bad investment? Well, that's going to be up to you, the investor. Does it do what you need currently or in the future? Most people, and Global X themselves, are going to say that QYLD is for people that need the income now, in retirement. And that is probably the best way to do it. But one thing to know is over the past year, if you had invested in the S&P 500 or you had invested in QQQ, or you had invested in QYLD, the number one performer would actually still be the S&P 500, which there should be no surprises there. But not even that far off, within 2.5% as of December 2022, would be the people that held QYLD. And then significantly below that, around 10% in terms of returns, when you factor in dividends and total portfolio value, would be the people holding QQQ. So, a lot of people will tell you, oh, you should be, investing in the NASDAQ 100, but I don't know. Personally, I'm still an easy, basic S&P 500 guy, so that's just my personal opinion. Like I said at the beginning of the video, I do hold shares of QYLD. I have no plans on selling them. I bought them because I had a bunch of cash on hand that I was keeping in a savings account that was making me no money. And I was like, you know what? I feel like QYLD will pay me out more on a monthly basis, and I can use that money to go to dinner or, pay my bills, whatever. Passive income essentially, so that's why I bought it. And is it down? Yes. Am I unhappy? Yeah, I wish I had more money, but life goes on, and I'm sure it's gonna come back, so I'm not really that worried. I still dollar cost average on a weekly basis into my taxable account, into the basic S&P 500 and actually QQQ, and then I also max out my tax advantage accounts, and I'm gonna continue doing that. So I wanna know from you guys, what are your thoughts on QYLD? Did you sell all of your holdings? Are you gonna buy more? What are you thinking? Leave them in the comments down below. I do my best to answer all comments on all of my videos. And with that said, if you're still watching the video, make sure you smash the like button down below, subscribe to the channel. We do weekly content on anything related to personal finance or fitness. I hope you guys have a great Christmas. Take care.